Hello guys, how's it going? Today is going to be a slightly different topic. Obviously, I want to talk about things that I enjoy learning about, and I hope that they can benefit people out there. Today, we're going to be talking about essentially economics, banking, the world economy, and also these are terrible. Oh my God. We're going to talk about the world economy and also national economies and where I think some problems are occurring at the moment. To begin with, most countries in the world have central banks. Those central banks try to keep inflation around 1 to 3% at the mandate of a central government. They want inflation to be 1 to 3% for multiple reasons, but it's another video. What has happened over the last 60 years has been disastrous, to put it the least. We have seen the purchasing power of our currencies decline drastically. How do I put this? Essentially what has happened is the consumer prices, which we see in the supermarket or on asset prices, or you go to a local hardware store, the purchasing price of something has increased at a greater pace than the consumer price. Sorry, consumer wages, and consumer wages haven't kept up with the price of certain goods and services. What does this mean? It means that long-term as a nation, as a global economy, this is not sustainable at all because it means that there is this ever widening gap between the price and the wage of the consumer. And that gap has to be met by more people in the family working to make ends meet, more debt finance to take out car loans, student loans, house loans. And obviously, if we add into that things like asset prices rising at a rate far greater than even normal inflation would, at say 2 or 3%, asset prices rising at 5 to 10%, it's not sustainable long term. It's not. It means the destruction of the middle class, and it means the working class become like a complete slave class. Like nobody benefits apart from the asset holders and possibly someone who owns a business who can make enough profit to get ahead of the inflation rate. Now, I've outlined that as a problem. I don't believe it's sustainable long term. We need solutions to that. This video is going to be pretty quick, but I'll list a few solutions right now and then I'll cover them in another video. One, we need to find a way for consumer purchasing power to increase at a rate greater than inflation. Therefore, our purchasing power, the dollars we earn at work, become more powerful and we can consume more things. That's why we produce things. That's why we go to work, so we can produce the things we consume. So our purchasing power needs to increase at a rate greater than the consumer price, which is the opposite of what's been happening for the last 70 years. We're becoming poor in real terms. Or we need to look at some other problems, I suppose, or other economic theories, including Jeff Snyder, uh, Clifford Hugh Douglas, who was founder of social credit, all these different theories in economics that we need to look at: Austrian economics, classical economics, monetarists, Milton Friedman economics. We'll cover those in another video, but I've laid out the problem. Uh, Consumer prices rising at a rate far greater than the wage and the consumer purchasing power. It's unsustainable. We're seeing that in the economy right now, where people are gradually becoming poorer and poorer. To be continued.